everybody. It is a great pleasure to present the talk that I'm going to give today, which is on the future of blockchain scaling and DeFi trading. My name is Aleksandar Kuzmanovic. I'm a professor of computer science at Northwestern University, but more importantly, I'm a co-founder of Swot Labs, which is a blockchain scaling company. And so I'm going to talk about what we are doing about things and basically about solving this scalability problem. And I'm going to touch about DeFi trading, which is pretty hot topics these days, and how and things related to that. So a long story short, let me just try to click the next slide. Long story short, Swot Labs is trying to solve the blockchain scaling problem. And if you ask yourself what that is, I mean, that easily is the largest barrier to widespread adoption of blockchains currently in the world, right? So, this sounds obvious, but let me just give you a few examples so that you can try to appreciate more this particular problem. So, the capacity of a particular block of today's blockchains is rather small, and so just to give a few examples, for example, Bitcoin's throughput is 3 transactions per second, right? So only 3 transactions in the entire world can go through the Bitcoin's blockchain, can be executed in the Bitcoin's blockchain in the entire world, right? Ethereum, which is the second most popular blockchain, supports 40 transactions per second. And if we compare this to just some existing other systems, we can see that there is a huge gap here. It's just, for example, credit cards typically support on average 5,000 transactions per second, and much more in the peak case. And if you take a few simple examples, such as, for example, US cars gas, if every car in US would fill the tank just once a week, just for that you need 450 transactions per second. And if you would want to have if you count the number of vending machines in the US and assume each one is used only 4 times a day, just for that you need 1,000 transactions per second. And at this point, it is a little bit disappointing, borderline embarrassing to talk about all these futuristic applications that people oftentimes connect with blockchains, which is machine-to-machine communication, global micropayments, and all these things that require tens of thousands of transactions per second, right? And so the mission of Swot is to scale all blockchains to thousands of transactions per second without changing a single line of code in the native blockchain system. Okay, so how we are doing this, I will try to explain a little bit later in this presentation. But the idea, the key vision for us is that there is a huge amount, there is a significant opportunity in improving the network infrastructure that supports the current blockchain systems. And if we are able to do that, we can actually scale up blockchain significantly. And it's easy to talk about that. I'm a professor, so we like to claim things like, hey, you can do this, you can do that. But actually doing this is something that I'm really proud of Swot delivering. And so we are not just talk, we are about action. So we had, for example, for Bitcoin Cash, we had a proof of concept where we were capable of actually showing that you can push the TPS rate to more than 1,200 transactions per second, which is 30 times, and we were actually capable of reducing the propagation times of blocks by as much as 30 times. We are currently supporting in our production, we are supporting the Ethereum mainnet, okay, so which is, as you remember, the second largest blockchain out there. We have our gateways, which is something that I'm going to explain a little bit later, deployed by more than 50% of the miners in the Ethereum ecosystem, and so it's been quite an accomplishment. On top of that, we are supporting these new coming blockchains that are somewhat related to Ethereum native code, which is the Binance Smart Contract chain, and Polygon, which is seeing a huge a significant increase in traffic recently. So we're helping this blockchain system scale, and we're partnering with other blockchains such as Ontology and others, and so on and so forth. But let me go to the basics and try to explain how do we actually manage to do all these things, and what is the key idea behind what we're doing. And so we like to call ourselves a layer zero approach to scaling, because when we came to the blockchain systems, to the blockchain space, all the layer numbers were already occupied. So you had layer 1, which is the consensus layer, layer 2, which is scaling layer, and so on, but nobody was thinking about layer 0. So we like to call ourselves as the layer 0 approach to networking. But let me try to give you an idea on what is that we do and how we do this. So basically, blockchain systems are these large-scale distributed systems that can consist of hundreds or thousands of or tens of thousands of nodes, right? And so these nodes communicate to each other, okay? And so intuitively, the more efficiently that these nodes can communicate to each other, more quicker they can send blocks to each other, and the more data they can communicate in a reliable way, the larger the capacity is of a blockchain system. So the way that Blocks route works, Blocks route has this notion of gateways, right? Gateways are nodes that on one side speak the native blockchain protocol language with that node, with that blockchain node, and on the other hand, it connects to other Blocks route nodes, which are much faster and capable of pushing data much faster throughout the network, as I will explain later. Okay, and so our gateways are capable, and our infrastructure is capable of pushing data 10 to 100 times faster than it is possible with legacy internet. And so basically this is, I will explain how this all works, but at the highest possible level, Blocks route provides an infrastructure. It is we call it a blockchain distribution network, but effectively it is a content distribution network for blockchains. Okay, that helps blockchains push data much faster and hence improve their scalability performance. So let me dive a little bit into the technology that we're providing and try to explain what is the secret sauce and how we actually do this. So the first opportunity that we have seen in our mission to scale blockchains is that the data is quite redundant in the blockchain system. What does that mean? Well, clients, for example, if I want to send one Ethereum from point A to point B, I'm going to send a transaction into the system that says like, hey, from this address, I want to move one Ethereum to this other address, right? So this transaction then needs to be broadcasted to the entire blockchain system. And on the other hand, when a block is generated, the block itself is going to consist of ordered transactions that need to be propagated to all other miners in the system, right? So the transaction is sent twice. Once when it goes from the user to the system, and for the second time when it is going from one mining node that generates a block to all other nodes, right? So this creates an opportunity to actually cache this initial information, the transaction itself. And once the block is sent, instead of sending blocks, Blocks route can send a much smaller identifiers, which then significantly shrink the amount of data that is sent when the blocks are sent throughout the system, which is the most important time, because how quickly you can propagate blocks is what defines how what is the transaction per second rate the blockchain system can achieve. So here we have a simple example where we, for example, if we have a 540 bytes long transaction, and then in our system internally we utilize 4 bytes identifiers, and these identifiers are recycled over time. But so basically this is the first step, and then when a block is sent, instead of sending the entire block with all its data, we are sending these much smaller identifiers within a block. And so that, for example, a 30 megabyte block becomes a 200 kilobyte block in our world, right? So the way it works is that the blockchain node sends this original block to the gateway, to the Bloxroute gateway. The gateway compresses this because it already has all these identifiers, send a much smaller block throughout the world, throughout the system, and then at the edge, the gateway sends again the large block back to the node, and hence the nodes have no idea what's going on. They're completely blind to the fact that Bloxroute exists in that particular environment. However, they are capable of receiving and sending and receiving much bigger blocks, which is important. And so another thing that we are using is a thing called cut-through block routing. And so basically cut-through is a technology that is really known for a long time. I'm teaching computer networks for a long time, and basically in early 90s, this is a technology that has been deployed in network switches, right? But we are the first to deploy this technology at the server level in the blockchain space. And let me just quickly try to explain how this works. So this is an example of a block that has been sent from this particular node, and time is pointing south, and hence the transmission time of a block at node 1 is the time it takes for this block to be put on the wire, right? I mean, you can't instantly just send the block. It takes some time to actually send this block. And then we have this smaller amount of time, which is the propagation delay, because these two servers, this is the blockchain node and this is the Bloxroute server, so these are not located at exactly the same location, hence it takes some time to propagate this block. That's all fine. But here is the key idea behind cut-through routing. So as soon as this Bloxroute server realizes that this is a block that needs to be broadcasted, it doesn't wait to receive the entire block and to verify that everything is fine with the block and so on. As soon as it receives the first bits of this block, it starts sending this a block to the rest of the system, right? And so what happens here is that this initial node still didn't finish sending all of its bits, but this remote node already started receiving these bits of this particular block. And this significantly helps with propagation times, because as you can see, this is happening in parallel. This block still hasn't been received fully at Bloxroute, but it already started streaming this block to the rest of the world. So this is something that helps. And so, long story short, Bloxroute is actually creates this broadcast layer, okay, which helps send blocks and transactions faster throughout the system. And instead of having a peer-to-peer network, which we don't replace, the blockchains still do have the peer-to-peer system. However, what we do is we provide this parallel network that is much faster, and which then significantly helps scale. And so instead of having a number of hops from sending data from one point to another in a peer-to-peer network, here we have 3 hops from the node to the Bloxroute cloud, we can call it that way. And so this is typically because we have our presence on different continents, and hence this distance is quite small. Then within Bloxroute we do this optimization to send data very fast, and finally we broadcast this information to all the other nodes in the system. And so this really helps significantly with scaling. And of course, this now brings me to the second part of my talk, which is well, we just established the fact that Bloxroute is really providing this fast network that can help with blockchain scaling. There is another thing that Bloxroute is good for, and to explain what it is, I'm going to just give a brief background about the traditional finance and speed, right? And the key point here is to just establish the fact that this traditional finance, which is far more advanced and where there is a much bigger amounts of money currently at least being run through, this is where the speed of the networks is known to have a significant value for the trading, right? And so I'll just give you a few examples. So traditional finance is known as a winner-takes-all kind of community, because if there is a house to be sold and there are multiple buyers, well, only one of them can buy that particular house, right? So whoever comes first is the buyer who's gonna be able to close that particular transaction. And so because of this, every microsecond counts, right? And so this is why it's on these traditional exchanges such as Nasdaq or New York Stock Exchange, you can actually go on and buy, put your equipment close to the exchange premises, so that you can actually have the ability to quickly close the transaction and so on. And on top of that, I've seen companies when I was on these trading conferences that actually are claiming that every nanosecond counts, and they are providing all these fancy switches where you can actually run information pretty quickly through there. In blockchain space, we are currently not there yet. We are currently at the millisecond level, but we are getting very closer to all these different scenarios. And of course, there are all these low latency network infrastructure providers that are used for traditional finance. And I'll just give you a few examples. There is a famous Chicago NYC fiber optic cable that connected Chicago and New York. There is Chicago, Toronto, New York ultra latency wireless connectivity, where people figured out that if you do this wirelessly, you can cut the latency much more. And there is Chicago Tokyo network. So basically, what these folks are doing for the traditional finance is what Bloxroute is actually doing for the blockchain systems. Okay, and I will explain that the opportunities in the blockchain system are really even bigger than what they are in traditional finance, and the cutting latency actually is quite significant. So let me just quickly run and explain about some of the APIs. APIs would be application protocol interfaces, services basically that Bloxroute provides to the traders in the blockchain space, currently on Ethereum, on on Binance Smart Chain and Polygon, and of course we are planning to work with whoever has interest to not just scale up, but where this decentralized finance is happening. And so basically the services that we provide are the transaction streams. So basically what this is helping the users is to understand what others are doing. So the sooner you know what others are doing with their transactions, the more quickly can you react to these changes on the market, and you can submit your own transaction and basically put it in the system as soon as possible. Another one is a service that helps the traders understand the probability that their transaction is going to make the next block, because oftentimes if you miss the opportunity to put your transaction in the next block, you miss that trading opportunity. So maybe you want to cancel your transaction or bump it up so that you can actually ensure that it makes to the next block. Another thing is a service that we provide, that Bloxroute provides, is transactions nonce monitoring. Basically, in the blockchain system, at least in the Ethereum space, each transaction has a nonce, and hence each transaction has to have an increasing nonce in order to be considered valid. And hence, if you stop this stream of transactions so that you miss a particular transaction, so for example, you have transactions 1, 2, but you miss 3, but you send transactions 4 and 5, these transactions 4 and 5 are not going to be able to make it to the blockchain system because it's going to complain that the transaction 3 is missing, right? So what we are providing is the ability to automatically monitor that all the transactions that our clients are sending, that they actually are all in order, and if something is missing, we alert the client so that they know that they need to resend this transaction, or we can resend this on their behalf. And we do have another service which is front-running protection. I will explain this a little bit more. But the key behind what we are doing is really providing this edge to the users of the blockchain system, which is to send data fast in the system. And so you can go to bdnexplorer.com, which shows these are somewhat outdated. This is somewhat outdated data, but basically it shows that when you're using our system, the probability that you're going to hear about blocks that are being generated in a blockchain system from blocks now from the blockchain distribution network is as high as 88.5%, and for transactions it's 70.3%. This number is being even larger nowadays than what it used to be. Okay, so why do we care? Why would somebody care about this? Well, sending transactions fast means that you can utilize all these opportunities so that you can actually make sure that your transaction is the one that closes a particular opportunity out there, and there are many trading opportunities in the blockchain systems, which is something I'm gonna explain a little bit later. And you really want to hear about transactions and blocks quickly, because the sooner you hear about that particular information, the sooner you will be able to send that transaction and basically make it happen. So here I'm showing just a single a Uniswap case. Uniswap is this very famous and very largely utilized decentralized exchange. And let me just explain how it works. So you just go to Uniswap website, you connect to your wallet, MetaMask in this case, and then you send a transaction into the system. If you're connected to a blocks route, you run it through the blocks route, and then miners receive these transactions, and blocks route is connected to most of the miners out there rather directly. And so this is basically where the exchange actually happens. So you don't know in advance which of the miners is going to mine this, and this is why you really want to be connected to blocks route, which increases your chances of getting your transaction mined sooner than the rest. And so here, and basically I'm gonna run through here through this slide, but basically what this is showing, this is actually trying to quantify the value that a fast network gives to traders in a Uniswap case. Okay, so basically what this is showing is the interblock time. So interblock time is this, and effectively what this is showing is that if your transactions come early in the system, even if you use blocks route, it doesn't matter, because if you send transaction on time, it will make it to the next block, even if blocks route is not used. On the other hand, if your transaction is sent very close to the deadline, well, blocks route can't help here either, because it is your transaction is sent very close to when this particular block is going to be mined. However, if you send a transaction between in between this critical delta, well, that's this is when Bloxroute is going to provide a value for you, because in this case you're going to make it to the next block, while without Bloxroute you're not going to make it. And so, long story short, putting all this into a model, basically, if Bloxroute is faster than peer-to-peer by this much, 300 milliseconds, 600 milliseconds, 900 milliseconds, then the probability, your trading probability is gonna be improved by this much. This is 12%. Okay, and currently we are pushing it even longer than 1 second. So we are providing really a quantifiable value to the users. And I will quickly just run through all these different services we have. So front running problem is a problem where, of course, somebody sends a transaction, and then traders seeing this particular transaction can actually figure out that if they send their transactions prior to this transaction A, they are going to be able to utilize an opportunity and basically get some money out of that. And so that's good for the user that sends transaction B. However, it's bad for the user that sends transaction A. So to help everybody, we are having a front-running protection service, which is which gives the probability, the opportunity for a user to send a private transaction, which is then sent through Bloxroute, and then we miners are not broadcasting these transactions, but they are known only after they are being mined in a block, at which point it's late to front run them. Okay, and so on top of that, Bloxroute is also providing a so-called back-running service, and so it is very similar to the private transaction. However, if this private transaction creates an opportunity for somebody to earn because it is, for example, moving a Uniswap position from one place to another, basically there may be an opportunity to benefit from from mining a transaction right after this particular transaction. Well, we are providing a background service that helps the user not only just privately send a transaction, but actually earn some money on any potential trading opportunities that their transactions create. So they, in this particular setup, earn 25% of any opportunity afterwards, and they are not losing anything before that. So to summarize, Bloxroute is a content distribution network for blockchains. Our key mission is to scale up blockchains, and at the same time, it provides a low latency network for DeFi and beyond, which is a very hot and emerging area. So we are excited to be in this space. That said, I'm finishing now, and I will be happy to answer any questions that you may have. Thank you so much.
Greetings and salutations from Sandton, South Africa. Much appreciated and many gratitude to the organizers of the Africa Digital Week. I am Shadrach Kubiani, co-founder of Coronet Blockchain, and at this in this particular segment, I'll be taking you through blockchain and the Continental Free Trade Agreement, the implications, the necessities, and of course the intersections where this particular technology, through our rollouts, is actually mechanizing the most flagship continental free trade area in the world. A bit of background on me. I have spent quite an extensive time in corporate, and in that vein, my last corporate job was with Deloitte, where I segued into Gershon, South Africa, whereby a priority focus across a decade has been on Africa's emerging markets. And with that, there was that transition into blockchain as a sector through Coronet Blockchain. There is a saying in isiZulu, which is one of South Africa's 11 official languages. As we get practical, let me repeat it at this moment. Ubuhle bendoda inkomo zayo. What that means, let me translate that for your benefit. For you to comprehend or appreciate the beauty of a man and the honor and the dignity of that man, it's best that you don't focus on his looks, but it's best that you focus elsewhere, which is his crawl, and you look at his cattle inventory. That, good people, is that Zulu saying, "Ubuhle bendoda inkomo zayo." What does it mean, though, practically? Just three things. The man having many cattle must translate into, or must mean, no poverty in his house. Secondly, his assets or multiple cattle means or ought to equal generational wealth. Last but not least, what many cattle mean is that his home is the land of milk, meat, and money. Good people, it's just such a coincidence that we spend quite an extensive time traveling into East Africa, having early this year, and having come back just recently from Ethiopia, which is the cattle capital of Africa. And on the global cattle inventory index ranking, Ethiopia ranks number 5. Why, you may ask? Because Ethiopia is home to 57 million registered cattle. Good people, the Ethiopian community has got almost as equal the number of cattle as the South African human population. Very significant indeed. What are the top cattle byproducts? If we were to just look at 3 for the purpose of this discussion, we have meat varieties, we've got dairy varieties, we've got leather varieties. And of course, tunneling further, looking at blockchain and the Continental Free Trade Agreement. Let's lower the drone from 10,000 feet to much lower, closer to the ground, and look at specifically Ethiopia's macro supply chains and look at the leather trade industry and the leather supply chain. What does that look like? I'm going to mention 3 scenarios in this discussion. Number 1, did you know it takes only 1 cattle to get a skin of that cattle and take that skin, work it into the leather goods value chain? Probably it will be off to France, where the Louis Vuitton factory is based, or it will be off to elsewhere in the US, where all these high-end brands are using Africa's raw materials. But that 1 cattle skin will be metamorphosed or turned into 5 leather bags on the high-end side. But watch this. These numbers are fascinating. Just watch this. Those 5 bags, when they make their way back into Ethiopia, when they make their way back into Africa, the source of raw material, they are now suddenly equal to 84 cattle. What does that mean? Let me make it practical. It means you need 84 cattle to buy those 5 leather handbags. Good people, I did say these numbers are quite fascinating. Let's look at the second scenario. It takes 8 leather skins or 8 cattle to actually stitch together the leather. Oh yes, that's just an African salutation from our friends up there. Yeah. It takes 8, staying on point, it takes 8 cattle to take their leather skins and actually stitch together the luxury seats of a luxury vehicle, probably in Germany or elsewhere. But watch what happens. Observe these numbers carefully. That 1 vehicle, when it now makes its way back into Africa, the source of raw material, whether it's minerals, whether it's leather or other moving parts, but Africa is a major source of this raw material. That 1 vehicle that required 8 cattle to actually make the seats. Now, to purchase that vehicle as an African resident or an Ethiopian resident, you now require 83 cattle on 4 legs to now acquire that vehicle. As you can see, these numbers are quite fascinating. Remember, blockchain for Africa's supply chains is what is now being used to mechanize, as we roll out Impact, to mechanize the Africa Continental Free Trade Agreement. So these practical numbers, they really, really mean a lot. Let's look at the third scenario. It takes one cow, to actually make 18 pairs of shoes on the high-end side. Of course, your Louis Vuitton, your Givenchy, your Gucci or Prada. Yeah, that's high street. From the bush to high street. So it takes one cattle to make 18 pairs. But when those 18 pairs make their way back into Africa, the source of raw material, look at what happened there. Watch this number carefully. Those 18 pairs of shoes now require 60 cattle in order to purchase them. Or rather, you need to exchange 60 cattle to acquire or become the proud owner of those 18 pair of shoes. With that being said, good people, maybe some of you may be aware that as of March 2021, the second richest billionaire in the world is no longer my former neighbor from here in Pretoria. He was born not far from where I was born, Mr. Elon Musk. He is no longer the second richest global citizen. That honor or that crown or that trophy has now been handed over to Mr. Bernard Arnault, who is now the second richest. In March, second week, his net worth was, of course, sitting at $158.3 billion US. On this particular tour, in this picture, they were actually touring with the former president of the United States, Mr. Donald Trump. They were touring Texas, where a new factory was just being opened. It makes you wonder as to what we have to do as Africans for these kind of factories to open on African soil. It also makes you wonder, in being obsessed with exporting only raw materials, not finished products, how much money has Africa been leaving on the table? It makes you think, doesn't it? With that being said, good people, there is a saying, there's a proverb in Ethiopia that says, the son of the Nile is often thirsty. I take that saying and put it back to you, audiences. If cattle is supposed to equal wealth, my question is to the sitting today is, then why is the son of the Nile River still thirsty? Why is Africa, after 400 years of exporting raw materials, after 400 years of being the go-to for global supply chains when it comes to the first mile of raw material, how come we are still a thirsty continent? How come we're still speaking inequalities? We're still speaking human rights violations. We're still speaking deficiencies in infrastructure and lack of manufacturing. How come? It makes you wonder. If you look at the 57 million cattle in Ethiopia, those good people are 57 million reasons as to why we ought to revisit Africa's leather goods supply chains and just Africa's supply chains overall. We need to rethink, reconfigure, and rewire those supply chains. That's where our blockchain infrastructure comes in at this opportune time, at this aptly timed intersection as the free trade agreement is rolling out into action. Good people, let's look at the other supply chains. Is it raw materials for a raw deal, or is it raw material for a prosperous future? Let's look at the cup she's drinking now. You see that cup? She's in the US, in New York. She paid $5 US for that cup. Maybe you're wondering, the hardworking, blood, sweat, and tears, humble Ethiopian farmer, what was he given out of that coffee transaction, that one coffee cup? After all, he's in the coffee business. I'll tell you this, only 1 cent was funneled back from that US-based coffee shop back into his pocket. Only 1 cent. That, good people, are the kind of raw deal arrangements that we've been seeing across the last 400 years. And if we are to avert them happening or reoccurring across the next 400 years, then we ought to rethink, rewire, and restructure our continent supply chains. And that's where blockchain comes in to level the playing field. Good people, maybe you're wondering about the other parallel supply chain. Can you believe it? This cocoa farmer right here cannot afford that chocolate. That chocolate is not a treat, it's not a luxury. It's simply something she's not about to even factor in to her bucket list or her wish list or even a dinner dessert because she simply cannot afford it. Despite Ghana and Ivory Coast being the global major exporters of the cocoa beans, accounting for more than 63% of export output, the farmers in these countries and other countries where smallholder farmers exist, they continue to suffer supply chain inequalities. They continue to suffer lack of access to things like trade finance, sustainability, and similar scenarios. We cannot, as you can see, continue leaving the supply chains as they are on the continent. We need to deepen the value. We need to deploy that track and trace mechanism so that as end user consumers, we know where our goods come from. We know that those along the value chains were treated equitably. That, good people, is a must and can no longer be negotiable. Looking at the other supply chain, 400 years, Africa has been home or has been the source of raw materials across the minerals industry, the mining, the extractive industry. But that, good people, as you can see, those kids, we still in 2021 continue to have child miners that are working the mines. We still continue to have child labor. We still continue to have human rights violations. Can we really afford not to know where our jewelry, where our minerals, where the microchips in our digital devices, can we continue to not know where they come from? I mean, even now, electric vehicles are a thing. Do we know where the cobalt comes from? Do we know that no human rights abuses, no child labor? Do we know that? That's why supply chain is not negotiable. I mean, blockchain for Africa's supply chains in this era, is no longer a negotiable thing. And that's why we're working very hard. We are folding. We are working right into the continent, working with the elders that have put the free trade agreement in place in record time. We are now working to attach wheels to it so that it practically resolves and practically is a beneficiation mechanism for Africa's communities. Good people, in just less than 719 Saturdays from today, we are going to arrive on the 1st of January 2035, where Africa's population is going to double from the current 1 billion into 2 billion. That, good people, are 2 billion reasons, why we ought to revisit Africa's supply chain, digitize them, and convert them into see-through supply chains. And of course, whilst at it, ensure that our border posts are turned into drive-throughs rather than the what do you call it, the legacy clogging mechanisms that have been stifling trade out of our regions. Some of you are wondering, where is the link really between leather goods and technology? Where is the link between coffee and technology? Where is the link between cocoa and technology? Well, let me take leather. Remember the 158 billion, 158.3 billion US dollars inside Mr. Bernard Arnault's pocket? Do you see that the number one richest man in the world is a tech giant, while the second richest man in the world is actually a leather trader? I know he goes by multiple titles, but when you really come away and peel away, when you peel away the layers of the leather, you find that Mr. Bernard Arnault is a legend. It's legendary when it comes to leather goods trade. And yes, indeed. So that's where the link is. You cannot speak supply chains and leave out technology. You cannot speak supply chains and leave out the benefits of blockchain to democratize access, to lower barriers to entry, and to create a see-through supply chain effect. Good people, That's where the three pillars come in: opportunities, platform, and community. Opportunities. With the African Continental Free Trade Agreement gearing forward to lift more than 30 million African citizens out of dire poverty, to add onto the intercontinental trade grid 450 billion US dollars. And of course, one of those milestones is to lower border tariffs by more than 90%. With that being the end goal, blockchain comes in between as a platform that we are deploying as a vehicle for development in order to bring about a see-through supply chain effect, whereby we've got supply chain transparencies. You know the who, the where, and you basically know the point of origin for each good that you actually purchase, for each item that you benefit from or you take off the shelf. You know the point of origin. That is embedded into our developmental framework in order to level the play field across Africa's trade corridor, so that the 99% small and medium businesses can benefit from the agreement as equally as the 1% giant corporates that call Africa their home. On the community side, it's very easy. Governments are actually expected to drive, and they're already doing that with the ratifying into action the Africa Continental Free Trade Agreement. They are spearheading the development. The community focus, those are active participants to actually get up and get Africa going to work. Get up, transition Africa from aid dependency into mechanizing itself or mechanizing its people into trade. So as we move from aid to trade, we need active, not passive communities. And of course, the private sector is a strategic player on that. Let me emphasize, blockchain as a mediator, blockchain as the trade referee is leveling the play field to ensure that there's that see-through supply chain effect from source to consumer. Good people, you know, my team, we looked at this word blockchain and we realized that blockchain has got an all-encompassing message to African leaders. All leaders from private or public sector ought to work jointly with us as Coronet Blockchain to remove the blockages and barriers that are dotted across trade corridors. If they do not do that, if they do not come and do the heavy lifting with us, if they don't remove the blockages in those trade corridors, then we're going to see an Africa that we do not want, an Africa that remains in chain because the blockages were not removed. Good people, that's blockchain for you. On that note, let me thank you for your time once again, and send, or rather repeat my gratitude to the event organizers of the Africa Digital Week. Indeed, we are working tirelessly round the clock to materialize that Africa we want, to materialize and shape that when Africa rises is because we are behind the rising. We are behind its rising and its emerging, so that we will go beyond emerging into establishment. Blockchain for Africa's supply chains is aptly timed in order to really level the play field throughout. Thank you kindly. Thank you very much. Bless you.
Hi, I'm Yael Tamar, co-CEO and co-founder of Solidblock, and I'm really happy to talk to you guys today about the transformation of illiquid products like real estate into tradable products that are easy to buy and sell. So without further ado, let's start this conversation by talking about centralized finance. What is centralized finance? What is CeFi? This is what we have today, what we're using every day. We're using banks, we're using PayPal, we're using Venmo. These companies are helping us transfer assets from one place to the other. When I'm sending my mother $100, it goes in between a bunch of banks, right? My bank and her bank, and those in the between, because she's overseas, it takes about 10 to 14 days to do the transaction. I can do the same with PayPal instantaneously, but again, you're going to use a centralized company that will take some fees, right, as a part of the transaction. Now, Decentralized finance is more similar to, let's say, a Bitcoin transaction. When I send my mother Bitcoin, there's a bunch of computers in between that will facilitate that transaction, right? But my wallet is of my liking, of my choosing, and so is my mother's, right? So individual is a sole custodian of the assets. You can also use a professional custodian like a bank, which is, by the way, where I think banks' roles are going to be in the future. You can you'll frequently see open source protocols, open source platforms where developers from all over the world are cooperating, right? Coming together to create and develop platforms. So you see this in decentralized exchanges, right? You can see traditional assets in this DeFi, the open finance space, which I also frequently call finance 2.0. You see also newly tokenized assets there, right? So products like Aspen Coin, which represents stake in the revenues of a Aspen St. Regis hotel. And then together with this new decentralized finance, you get transparency of issuance, loans, easy collateralizing products, and so on, right? So to review the difference between the traditional system, where there are a lot of institutions coming in between, and this computerized system of decentralized finance, of transacting between two individuals. So let's go through some examples of decentralized finance. Now, number one is open lending protocols, MakerDAO. MakerDAO is a decentralized DAO, a decentralized autonomous organization, which brings individuals together to govern and create rules upon which this organization functions. Now, this organization also issues DAI. DAI is a stable coin that is pegged to US dollar, meaning that it follows the value of US dollar, and it's backed by cryptocurrencies at the moment. So, compare the US dollar, which is backed by IOUs from the US government, and cryptocurrencies, which are actual assets that you can liquidate and get, even get US dollars if you like, right? So now MakerDAO is actually expanding its collateral pool and wants to add real assets such as real estate. Another example that I already mentioned is decentralized exchange, such as Uniswap, which is really, really interesting because these exchanges don't use traditional liquidity providers, don't use institutions that have a lot of certain assets that they can then, tap into when these assets are selling or, are selling out really fast. Now, consider what happened with Robinhood, during the whole GameStop situation where they had to tap into a lot of liquidity. They needed money really fast, right? When everybody was selling certain stocks, right? So, and they had to borrow a lot of money, and there's not enough for them to borrow. So they just had to close down the whole exchange. So the way decentralized exchanges work is they engage the so-called liquidity pools. They bring a lot of users together to pool their assets, and when the demand increases for those assets, then they tap into the liquidity pool. It's a very, very smart system. All the users that are participating are getting a piece of the transaction fee, right? So one good example is actually Realty, a real estate company that is trading their assets on Uniswap. I already mentioned stable coins such as DAI or Tether, that are basically collateralized. DAI is collateralized by crypto, Tether is collateralized by US dollars, in fact, right? So what I'm here to talk to you guys about is how we're getting from this centralized to decentralized finance, right? So that's what's really interesting for me as a finance individual, and also, as a curious consumer. How do we get there? So I believe that the way to get there is by putting real assets, right, on the digital world. But how do you take a project in real estate, let's say a tower, or a hotel? How do you put that in the digital space? Well, that's why we have tokenization, right? So tokenization is technically asset digitization coupled with securitization. That's what it is. So first, you take a building, you take a project, and you securitize it. Meaning you divide it into shares that you can sell to investors, right? So it's a very traditional mechanism. Usually do this to a company that owns a real estate asset, right? That's the first step. You securitize it. And then you digitize it, meaning that we issue these securities on the blockchain. We write the owner's information on the blockchain, meaning, not private information, but the proof of purchase for that asset is written on a blockchain, meaning that it's secure, it's immutable, is there. That's number one. Number two, because it's written on a blockchain, we now can trade these securities easily, right? We trade them, you trade them with the same ease as you trade crypto securities, crypto assets, right? Crypto assets. Now, where do we trade these digital securities? We trade them on over the counter, meaning that you can actually, if you know the seller, if you know the seller knows the buyer, they can both go on the Solid Block platform and they can trade these securities. One can sell to the other. And on top of that, these securities are then registered or listed on specialized exchanges. These specialized exchanges are really alternative trading systems, ATSs, with a special license to trade digital securities. So that's where these securities are traded. Now consider the real estate market, which is $300 trillion worth. It's huge. Yet only 1% of that is liquid, right? So we have a huge opportunity of putting all these assets, right, making them into financial products that people can easily benefit from, right? So the biggest chunk of money in real estate is not in single family homes, right? These are all the big money producing properties, right? So tokenization is a very, very important phenomenon that was basically born out of two things. Number one, the Jobs Act, which is the U.S. legislation that came out in 2012 that was meant to help small businesses. So the government said, well, if small businesses can go and get liquidity in the secondary market, by letting investors trade their securities, that's going to help them. So that's what they allowed. Now, with blockchain coming into the market at the same time, and these two things combined, you get this law on steroids. You now can actually execute this, right? Investors can start trading their securities without them going public, right? Going public is a very, very expensive process. So blockchain actually kind of catalyzed this whole process of tokenization, right? So COVID last year proved that anything we knew about real estate can really be put under a question mark, right? Asset ownership has changed. How we have more assets that we own virtually or digitally. You even may own a virtual home and a virtual platform. All these things are changing so much and all the time, right? And on top of that, offices look completely different. People work from home. Hospitality changed as well. So all of that is just created a fertile ground for tokenization, right? For bringing the assets into the digital world, right? So in a nutshell, tokenization makes investment accessible. It enables smaller tickets, simplifies transactions, and creates a secondary market, as well as new business models. So the advantages of tokenization include helping asset or fund owners to raise capital more efficiently, as well as giving them investors unprecedented access to private real estate investments, as well as increasing transparency and liquidity, right? So to review, the process of tokenization is called a security token offering, right? We have the initial offering, where we're offering these securities to investors. We create all kinds of appropriate regulation and compliance to do that. And then the secondary offering, where we list the security on an ATS, right? So imagine the world in which, instead of investing in a real estate asset at the beginning and then being able to exit 5-7 years, you can actually exit anywhere along those lines, right? You create a new market where real estate assets are traded, right? And you create an opportunity for investors to exit at a profit and go out and buy new assets, right? And those that need to sell and have to sell may exit at a loss, but that also might be beneficial for them, right? Because they may need liquidity. So one of the good examples for this, of course, was the Aspen Coin project, the tokenization of the Aspen St. Regis ski resort, a world famous resort that raised $18 million on using a Solid Block tech solution, and issuing 18 million tokens, which is it's now listed on T0 platform and trading at a 20-30% premium, right? So basically, we're using tokenization as a base. But now let's imagine this new financial order, right? Which digital real estate will enable all kinds of new products, new financial products, right? So of which tokenization is acting as a base. So number one, of course, we're able to issue and trade financial products, right? But think about all kinds of derivatives, index funds, benchmarks, what we have in the traditional world can be supported through digital real estate. Think about the fact that we can trade these securities on many different exchanges at the same time, and also are able to collateralize these investments to issue loans to customers, right? And finally, we're able to connect to DEXs, to MakerDAOs, all of those things, the DeFi funding sources, pool people's capital together, and then we'll be able to create even more liquidity in the market, right? So these are all the solutions that are spanning tokenization. So my main point to you guys today is that we're able to create a new finance once traditional assets, which have the majority of assets today, will become digital, right? So I'm happy to answer anybody's questions. You can reach me on anywhere on social media, Yael Tamar, on my email, and check out our blog, check out our Tokenization 101 course, which should be available to answer all of your questions about tokenization. And with this new Finance 2.0 phenomenon, I'd love to hear from any financial analysts or just basically any professionals that are thinking about new products to launch and cooperate with you guys, as well as solve all kinds of challenges together. Thank you very much.
Hi everyone. Thank you so much, Digital for Foundation, giving me an opportunity to speak about international conference on crypto finance and blockchain technologies. It is great to be part of World Digital Week, talking along with all the expertise in blockchain space, in cryptography space from around the world. My topic is going to speak. My topic is more on speaking about the future of money and blockchain. I just want to discuss more about how we can create an ecosystem for decentralized finance. How we can use blockchain, how we can use technologies like central bank digital currency (CBDC), and also cryptography or NFT to build an ecosystem or build a sustainable finance model to established entrepreneurs who have been in the business for a long time, and they would like to contribute to the ecosystem. It's also the idea is how we can actually build a holistic ecosystem for everyone in the world. So that is where my focus is going to be. So I would like to talk about both sides of it. Initially, talk about more about the blockchain, how entrepreneurs can get into the ecosystem, how they can create business models in blockchain, how they can create products in blockchain. Then after, obviously, how they can grow their business, and then looking at the global market, they can also exit from their business. So it's a very much like an end-to-end solution. I would like to discuss about it. So the money plays a bigger part in any business, right? You might have a great idea, but to execute that idea in a real world, you need couple of things. One is definitely you need a great business model first, how to take this idea to the market, whether you want to do business to business, whether you want to do business directly to consumers, or you want to work with the government to basically make things happen. So this is the first thing that everybody wants to fix it when they are talking about their business and model. But the second most important thing is building a team, and without a team you cannot literally build a product. Yes, you can be an entrepreneur, you can be a techie, you can be do coding 24/7. So you can build an proof of concept and bring it to the market, because that is your idea, that's what people want to see or the investors want to see. So definitely being a founder, you can do that on your own. But when it comes to taking that idea to the next level, connecting them to the market or your go-to-market strategy, connecting them right kind of audience to even get the lead generation, or even taking it to the to the investors to pitch that idea, get funds. So all these things needs team. And when you're actually going and hiring a team, the first thing you need is definitely their talent, what kind of skill sets they have, what kind of expertise they have, how they can bring value to your business. But in return, obviously, you have to pay them. This is where the money comes into picture. And we all know that ideation stage, nobody takes that risk, takes that kind of risk, is because it's a very high risking proposition. Nobody takes that risk to put the money. They want to see some traction in the market, they want to see some some leveling of work in the market, and they want to taste that in the market, so that once you have that proposition being accepted by the community or by the open market, then obviously you have like different level of investors come in and they put their money, or they invest in your idea. But to basically build that, it's a very micro level things I'm talking about. But if you look at the macro level things that we need to discuss, probably with a regional level or state level, or if you're talking about national level, or at a world economy, it's pretty much works in the same functionality point of view. And that is where we need to create a sustainable ecosystem. So, we're talking about 7 billion plus population in the world. And if you look at the economy from the demographic point of view, there are developed countries, there are semi-developed or developing countries, there are also, poor countries which actually need support to get to the next level. But to make everything happen, the first thing you need is the trust, right? And now, because of certain situations in the world like COVID-19 and everything, it is very difficult for business people to meet one-to-one basis, travel undisruptedly, and have personal conferences or personal appearances, personal meetings. So the ultimate thing left with us is basically connecting with each other through the virtual platforms like digital conferences, virtual conferences, or even Zoom calls and Google Meet and etc., Skype, all this. So when you actually adopt this new kind of technology or new kind of conversation, so everybody wants to see whether they are actually talking to the right person, because there are various mediums of this communication, right? You can have chat based or text based communication, you can have audio based communication, you can have also video based communication. So there are various types of communication with one another, but the fundamental of each and everything is, are you talking the right person? Are you talking the person that you want to really communicate? So how do you basically take that decision? Because everybody's time is very precious. I think that is where the blockchain as a technology plays a very major role, because anybody and everybody with having an email ID or phone number right now, they can create an account, right? But doesn't mean they are the person, or that's the person that you are looking to communicate. It could be anybody having just a computer skill sets, they can actually do that. But to know the right person, the right identity of that person, you need to get to that due diligence level. You need to reach to that particular, do a validation, and that validation part comes from basically the technology that we have right now. It is blockchain. So how do you basically do that? So we have like 3 to 4 layers of already KYC already been created in blockchain, so that anybody who is creating an account based on their thumb impression or facial recognition, there are multiple layers of security we can actually put, so that the person who is actually creating an account is the real person, and he's not a bot, he's not a robot, right? Or not a fake account, not a fake account. So that's where the blockchain technology can play a major role. The second part is transparency. There are multiple transactions happening in businesses every day. I mean, I would say every minute, right, or every second of the hour, right? So when these kind of transactions happening, it's very difficult to get a track. That's the first thing. Second thing, also look at the performance of the business. See like whether that transaction is a legal transaction, is that a proper, that is required by your organization or by any investor or even the government for compliances purposes. So basically authenticity of that transaction we need to track, and this is very difficult to do that, because right now there are many softwares available where you can actually force those things. You can manipulate your Excel sheets, your financials, and you can give it to someone. So until and unless we have a verified system, we have a secured or safe ecosystem, we cannot actually go back and check and track that. So that's very much important. Third most important thing, I would say, the transactions, like each and every transactions that is happening, it needs to be tracked, it needs to be secured, it needs to be safe. Because when you have multiple transactions happening from one account to another account or multiple accounts, so you have to depend, as per our traditional ecosystem or financial ecosystem, you have to depend on the centralized bank, like I mean, obviously, to give you the report, and that takes a too much time to get access to that documents, then verify that, then recheck that. So this is really going to take time. So now today's era where the business is happening very fast and on an immediate basis, we need something that can actually help to get those I would say parameters done, and they can take it to the next level. So that is where the blockchain can play a very major role. So what exactly blockchain is? So that's what we need to understand, and to be very in simple language, it's a it's a database. It's a decentralized database. It's unimmutable, so you cannot actually change it. Once the node is created, then you cannot change it. So it is protected, it is secured. And third thing is, if you have multiple layers of communication position in the organization, so you basically take a consensus when you actually develop anything and you want to share with anyone. So because you also need to be make sure that the information that you are sharing, or the private privacy data, that the data that you are sharing with others are actually secure. It's also protected, and that's where the blockchain plays a major role. So looking at all these things, so what we're trying to do is basically create a global decentralized or global blockchain technology consortium. So the whole idea is to bring the expertise from around the world together, and build softwares or develop softwares that can be champions for all the the large scale industries or small medium enterprises as well as startups. So we work on a very open source technology platform where we develop the software, we exchange these softwares across the countries or across the organizations. Then we exchange the technical expertise as well. So now we have a very a matured ecosystem, I would say. If you talk about like Silicon Valley with, in US, or Silicon Roundabout in London in UK, or Silicon Corridors of India, which is we call Silicon Plateau of So these are the destinations where it is very much matured right now, and our idea is to connect these hubs together, this innovation hubs together, so that is innovation can happen every time. And particularly talking about the technology and the implementation part or deployment part, what we're trying to do is basically building clusters in and around, so that we can assist these companies or individual founders who are there for business, who want to do business across the world, but they want a protected system, they want to have a secure transactions, they want to have a safer communication. So this is what we are trying to do. We have three multiple layers of doing it. One is we do have a certification program, so we make sure that particularly the developer community is empowered, they know what they are building, and also there is a right intention behind it, so nobody actually get trapped, or nobody get you know very much like providing a right kind of in IT infrastructure for the ecosystem. The second part, we actually work on an accelerator mode or cohort mode, which gives us a kind of a platform to bring all these ideas together, discuss the ideas with each other on a very open source platform, so that each and everybody can with a consensus, of course, they can actually talk to each other, they can get the validation of their idea in the right platform, and then after bringing a mentor pool, so that these mentors can actually help these startups to take the idea to the next level, whether building a simple proof of concept that can be validated in the market through the technology hubs, or maybe they can build a complete minimum viable product in collaboration with a large enterprise or the government, so that their idea can be adopted by somebody else at a larger scale, and it can be implemented stage by stage basis. So you need the right kind of technical and non-technical expertise. So this is what we actually focus on, to bring in the right kind of mentors who can help to take these ideas or take these concepts to a viable product in the market. And then after, what we bring in is we have already a kind of ecosystem where we can actually take this idea and convert it into an enterprise concept. So it means obviously you have the paid customers, you have the enterprise partners, so that your business can be sustainable. It takes some time to get there, but once you are there, and once you are already doing business on a regular basis, so that increases your bandwidth, that increases the revenue volume, that brings new business opportunities to on the table. So that's where we again focusing on. The third most important thing is we are already building a fund, the one I'm going to talk about, the future of money, is a tokenized platform. So if you see the businesses in a traditional approach, like you normally see businesses who have ideas, they either get supports from friends or family, at an initial level, they borrow the money or take the money on a loan basis, they build the product, take it to the market. If it works, great, then obviously they have the traction. After a certain period of time, they go to the private equity investors or angel investors, raise the money. So this is the only target, or go to traditional banks and take a loan and then expand, as a basis. But if you look at those kind of models, it takes a lot of time, and uh, it's very difficult to basically build a business. If it is a tech business, if it is a service based business, then having that kind of traction, bringing those kind of ecosystem together to make things happen takes a lot of time, and also it consumes a lot of energy, a lot of collaboration, all these things to make things happen. So what is and again, you need to have a proper background to either a financial background or an entrepreneurship background, so that you can actually build these products and take it to the market. But what we feel is, basically, if you really want, you believe in your idea, and you want to bring a community together who can support you, both financially, as well as technical aspects, or from non-technical perspective as well, you can build a financial digital asset right now. And that digital asset is, we call it non-fungible token, or NFT. So basically, it's a private blockchain layer you built on top of the enterprise softwares available right now, and you can actually distribute those kind of tokens in the market. So it means you can allow investors right from the day one you are in business. So this is where the future of money is going to be, whether it is in cryptography from form of bitcoins, ethereum, other kind of money, digital money available, or else you can have your own digital currency of your own, and you can actually start a business right from the day one of your operation starts. So this is where we actually see the future is going to be, because there are a lot of investors who are also looking alternative modes of investment. And particularly, if you look at the global transactions that is happening, everybody is seeking for opportunities where they can actually invest in a larger audience, a larger market. They can have a safer journey with you, so that needs to be protected. Third is, obviously, the transaction has to be safe. The transaction has to be secured. So that's where the blockchain technology can play a major role, and NFT, non-fungible token, is also an opportunity coming in. So to make things happen, what we have done is we have introduced three things. One is the blockchain technology. So we have built products. We have now available use cases where we have built products or platforms in blockchain, where anybody having an idea or products, they can simply put their products on our platform. We can actually create hash for them. So that means we are actually very technical things. So we can create node for them. So they actually own these products. They are the authority of that product. And it's a virtual marketplace where anybody and everybody having a digital wallet, they can actually buy the product or sell the product. So that gives more power to the business side of the community, to basically listing their products, selling their products and stuff. On the other side, you have also investors who coming in and buying these products, or being a transfer their funds, so that you raise money right from the day one, based on your product capacity, based on the market, based on the future of the transactions or your social capital. You can actually create that. So all these products that is we have built is right from the luxury products or limited edition products. We have like technologies available for healthcare. You have products for sports personalities, musicians, business, media and entertainment world, where independent producers, independent content creators can actually set up an NFT and they can do it. You have physical artists or digital artists who used to go or travel to sell their products in museums and different exhibitions. Now they can actually set up virtual exhibitions to sell their product, to buy and sell the products or services over there. So these are the kind of use cases we have already created, but there are many opportunities out there, say for example fintech. So if you talk about the financial technology now, we can talk a little bit more about the decentralized finance, DeFi. So the whole idea is, instead of depending everything or every time, I would say, on the one centralized authority, the central bank, we can actually have multiple layers where we can actually create tokens or digital money of any particular organization or any particular authority, and then after for a particular city or particular country, then they can actually consider it as a legal tender or legal money for the currency they're going to use. And they can also raise money for their country, for their project, and everything from there. So this is something is coming up, and there are many countries who have been adopting this kind of technology to build their own digital currencies, put all of their services, major services like aviation, their buying and selling, their construction, all these products they're putting on blockchain, so that they can actually decentralize the whole ecosystem. They can invite world global investors to their platform and get the product to the next level. So that is where I think the decentralized finance plays a major role, when it comes to building an ecosystem or future sustainable ecosystem, I would say. Then there is a concept coming up in the ecosystem right now is CBDC, the digital identity, and connecting that with the central bank digital currency. So instead of again going back every time to your bank and doing it, when it comes to global transactions, cross-border transactions, it takes days, it takes weeks. So right now no business has that kind of bandwidth. They can wait for that much time, because you need real world services and real time services, right? That is what the consumers expectations are, or the customers expectations are. So to meet that expectations, we need to create a real time transactions as well. And that is where instead of going through the manual process or eventually long process of 5 to days, 6 days, 7 days, sometimes weeks, we can actually create digital currency that can be accepted by banks, and you can actually do a transaction, you can clear the process. Then after, obviously it needs the banks to settle the process post that. So that can be possible, and you just need an authorization from the central bank that this legal tender that you have created, or the money that the digital money that you have created is actually authorized and it is accepted by other people with a consensus. So this is the next level of ecosystem development that is happening right now, and it will help to do the cross-border transactions very fast. It will bring new opportunities to many countries who have been always depending on the World Bank to borrow money to do developments and pay back. So they can actually create assets as well, digital assets of the infrastructure they have, of the capital they have. I mean, capital in the sense social capital they have, also the intellectual capital they have, and based on that they can actually build digital assets, digital identity ecosystem, and they can come back and to the world community of investors, and they can approach that and take it to the next level. To make everything happen, you obviously need collaborations amongst the community, and that is where we think the non-fungible token or NFTs can build can play a very, very significant role, and not only for the government but for the community overall, for the entrepreneurs community, for policymakers community, for all the support system that is required can be actually done through the NFTs. So you have a product that is already available in private blockchain, and then you can share that with a permission blockchain to anybody that you want to. And then there are also government projects, which is like healthcare, education, welfare services. All these things can be put on a public blockchain, and anybody entrepreneurial community can actually get access to those data, those information, create something which is very valuable for that particular service or product they want to build, and then regulate it so that we can actually create more products, bring more transparency to the ecosystem, as well as build a sustainable future for our next generation, I would say. So overall, I would say that the cryptography finance, as well as the technology behind it, the blockchain technology, has a major role to play at every level of decision making. And uh, if we start adopting this new technology and building products for different services, different challenges we have, I think the world will be in a very secured, secured place. um, Everybody in the ecosystem can get benefit out of it. um, the transactions that will be happening among the the communities, among the businesses, among the government, even cross-border country transactions can be secured. um, as we are growing with internet, you know we need a safer communication mode, and blockchain can actually bring it. Blockchain can actually do it, so blockchain technology can be deployed for this. So I think overall the, the technology has a greater role to play. Now it's up to us how we going to develop it in an open source platform, how we going to deploy it, how we can build a sustainable ecosystem that can be used by or for future generations. So I'm very optimistic. I am very much optimistic. Being an entrepreneur and as well as investor in NFT space, we have developed products. It's already full-fledged running, so we are very positive towards it. There are some roadblocks, like regulatory aspects of it. There are many countries who are not ready to take this challenge to accept it as a legal tender. So I would definitely request to those countries, please look at some of the use cases, please look at some of the best practices that is available across at a global platform or a global system. uh, Please try to adopt it at an initial level, use it in a day-to-day activity, and then after, as a community, uh, I think you can take decisions whether to accept it or not accept it. But with a positive note, I would like to end this discussion and conversation. I'm sure there are many questions for the audience to ask. There are many industries which has been on tapped right now with blockchain technology, or the cutting edge new technology, be it artificial intelligence, machine learning, or Internet of Things. But I think if we combine these technologies together and build the products or build platforms or services that is required, and make the automation process, make the automation right from the day one, I think we can achieve great milestones. We have the goals that we need to do, be it climate change, be it building the next sustainable ecosystem for the world. So that's definitely we can achieve that. So with this note, thank you so much for the opportunity again, Digital for Foundation. I'm very thankful, World Digital Week, to giving us this platform to talk about the current challenges, situations, and how we can come out of that. So definitely, I think I'm looking forward for the Q&As, soon. Thank you so much.
This is Subhasis Das, connecting from India, and I hope that you and your family is doing well, because we have went through a lot in 2020 and 2021, and I really hope that 2022 will be different. So today I'll be speaking on blockchain and how blockchain is changing the world. So before we start, let me have a quick introduction about myself. So I have been working with some of the most innovative companies in the world, like IBM, which files the largest number of patents in a year, Maersk, which is the largest shipping company in the world, Philips, which is trying to bring in innovation into the healthcare industry. And presently, I am working as a finance manager in Cargill, which is a market leader in agriculture and different kind of uh, biotech products. Uh, so by qualification, I am a CMA, I am a certified Bitcoin professional and a blockchain developer. I have written 2 bestseller books, designed few innovative educational apps that is helping the finance and accounting students to learn better. So I have only 15 minutes to discuss about this vastly complex topic, blockchain. So I'll not be able to touch upon the all of the different aspects of blockchain. But one thing I can promise to you, that after finishing this session, you will be having some takeaways that you can for your further learning in your blockchain journey. So these are the learning outcomes. You will be learning about the basics of blockchain, types of blockchain, blockchain SWOT analysis, and blockchain revolution. So let's start with the basics of blockchain. Uh, let's take a simple example. Like suppose Bob wants to send $100 to Murphy online. So before 2008, there was only one way to do it. They have to depend on banks and financial intermediaries. That is why I'm mentioning here it is a peer-to-bank to peer network, because Bob and Murphy are peers here and the bank is sitting as an intermediary. Let's assume that Bob and Murphy are maintaining their bank accounts in the same bank. So what the bank will do, it will reduce Bob's ledger balance and it will increase Murphy's ledger balance. So if you see, banks and financial intermediaries, they just work as a trusted bookkeepers. So I have taken bank just as an example, but there are millions of intermediaries between you and me if we want to do some kind of transactions of value. These intermediaries can be government bodies, financial institutions, credit card companies, tech giants like Google and Facebook, online marketplaces that connects buyers and millions of sellers like Amazon, legal bodies. So the point I am trying to make here, that any transaction of value, that must be recorded in some kind of ledgers. For example, uh, let's understand what is a ledger. The ledger is nothing but a log of data. Okay, it's nothing but you can think of it as a notebook. Only now, after the digital revolution, we are using the databases. Those are ledgers. So ledgers are really important because they create institutional facts. So, for example, this house exists. It is a brute fact. But my ownership of this house is not a brute fact. It has to be recorded in some kind of ledger. Okay. We'll see what kind of ledger it is. So, for example, suppose I bought this house. What is the first thing I will be doing? I'll go to the registry office and I will enter my details into the records of registry office. The record of register office is a centralized ledger, a trusted ledger. If I want to transfer my house, again I have to record the transfer in the records of registry office. Similarly, if we want to execute any kind of contracts, we have to depend on many intermediaries like lawyers, government agencies. Even for our identity, we have to depend on some kind of centralized ledger. Like suppose your name is not appearing in the citizen database, you are in bad luck because you will not be considered as the citizen of this country. Ledgers also give a confirmation of status and authority. For example, let's take a simple thing like how do you know that you passed or failed in an exam? You have to check the records of your university. And regarding the authority, we can say that the constitution of a country is also a ledger because it gives authority to states and center, to MPs and MLAs. So ledgers are really important. And if you see, all these ledgers are maintained by certain trusted third parties or intermediaries. Why? Because suppose I want to sell a car to you and I note it down in my notebook, you will not believe on my notebook. That is why we have to go to the RTO office, or we have to record the details in the transportation department's record, because we trust the transportation department. So it acts as a trusted third party. So the ledgers maintained by these trusted third parties uh, are called centralized ledgers. So the crucial point here is we have to trust these intermediaries and their ledgers, and this trust comes with a cost. Let's see what are the costs. Like the centralized ledgers are maintained in centralized databases. So whenever a pile of data is stored in a single place, it is prone to attacks. Like there can be cyber attacks, system failures, physical destructions. We lost our data. Similarly, we trust these intermediaries to keep our private information safe. Remember, while you opened a bank account, how many details you have to provide? You have to tell your name, your father's name, your spouse name, where you are staying, what job you are doing, what is your date of birth. So all these are private details. Uh, those should be kept secure. But as we have seen over the last 2 decades, there has been huge data breaches. Similarly, identity theft is a major issue because we provide our identity to these trusted third parties, and obviously they try to secure it, but because of the nature of their centralized databases, there is always a risk of uh, leaking the data, leaking the identity information and all. Next thing is censorship. For example, if you are using Twitter, if you don't follow their guidelines, if you have a different kind of opinion, they can just remove you from their platform. I think they have done it for the last American president also. And the next thing is, whenever we are keeping our money in the bank, we trust the bank that it will be managing its finances well and it will not go bankrupt. But still, it is a trust. It can go bankrupt. The thing is, there are huge transaction costs also. Just because of record keeping, these intermediaries charge huge transaction cost. Suppose you want to make a cross-border transaction, you have to pay huge fees. Then there comes the legal cost. So whenever you introduce a third agent, between the transacting parties, there is always a chance of third party risk. So those kind of disputes increase your legal cost. Lastly, corruption. So when power is centralized with few people, it's human greed. They can manipulate information. They can change the details, bribery, changing the details, selling your private information, misrepresenting the financial statement, all kind of corruptions. This is the cost of trust we have to pay. So what is the need for trusting these intermediaries? Because there are many costs that are involved. Uh, so this begs a question that why do we trust these intermediaries? We trust these intermediaries because we can't trust each other. Yes, we can't trust each other in transactions of value because assets, they don't work like information. For example, after this internet revolution, it is very easy for us to send information across the globe. Like by one click, we can send documents, mails, videos, photos, everything. But all kind of digital set, or if I can say, all kind of digital things, they can be infinitely copied. But when you come to assets, for example, money, you don't want it to be infinitely copied because money has to be scarce. The assets should be limited because resources are limited. It is not unlimited. But if you look at the uh, digital resources, they can be copied infinitely. That is why we need an intermediary for all our digital transactions so that nobody can make a copy of transactions. So suppose in the previous example, we have seen that Bob has sent $100 to Murphy. He should not be able to write another entry into the ledger that he is spending the same $100 to Lindy. Then that will be a double spending of the same $100. It has been called famously the double spending problem. And until 2008, nobody had found a solution for double spending problem. That is without involving the intermediaries. So the question, the challenge is, can we create a mechanism where we don't need to trust any intermediaries for verifying our ownership and transfer of assets? So in 2008, we have invented the trust protocol or blockchain. The first application of blockchain was Bitcoin, the famous cryptocurrency, and it was developed by a pseudonymous person, a shadowy kind of figure called Satoshi Nakamoto. We don't know. He is still some kind of mystery. So what is blockchain? So Mr. Satoshi, while introducing the prototype of blockchain, wrote in a CryptoPunk forum that I have developed a new open source P2P cash system called Bitcoin. It is completely decentralized with no central server or trusted third parties because everything is based on crypto proof instead of trust. So basically what he is telling that the transaction will be happening cash to cash without any intermediaries. There is no need to trust any intermediaries. So what is blockchain? Blockchain is open source software. Anybody can download, run, make improvements to it. It is a distributed ledger. So a copy of database is available with millions of nodes, millions of computers, or even if it is not a million, thousands of computers. So in case of bank, the details are stored in a centralized ledger, which is prone to single point of failure. But in case of distributed ledger, since it is spread across a network, even a single computer fails, it doesn't affect the whole blockchain. So the next thing is it is a decentralized network, like it is managed by a mass collaboration. It is a bunch of people who come together to manage the things. They bring their own individual computers, they connect with through a open source software. Nobody controls the network, everyone has equal right in the network. They verify the details, they update the details by connecting with each other. Secure and immutable, because transactions are recorded in batches called blocks, and they are linked to the previous block through a cryptographic technique called hash. Think of hash as a fingerprint. So any digital document is having a fingerprint. So the previous block hash will be included in the current block hash, and the current block hash will be generated. So if there is any detail which is changing in the previous block, it will change its own hash. And since the hash is linked to this present block hash will be changed. Again, all the subsequent blocks will be changing. So any change anywhere in the blockchain will be noticed instantly. Moving to next, let's go back to Bob's example and how he will transfer the $100. Let's say he's transferring 100 bitcoins. BTC is the short form of Bitcoin. So he'll be using a peer-to-peer network. Here there is no bank. So everybody is peers, everybody is having independent computers. They will be maintaining they will be recording the ledger in their own databases. I'm mentioning as blockchain, and everyone will coordinate with each other to update the ledger so that it is correct. Okay. So the blockchain transaction process will happen like this. Bob will initiate the transaction through a wallet software. It will broadcast the transaction to the P2P network, and there will be some mining nodes. Mining is nothing but verifying the transaction and adding it to the blockchain. So these guys will be competing with themselves to create a block of transactions. Once a valid block is created, then it will be transferred to again the P2P network, and they will be verifying it. And since these miners have spent substantial resources in the form of electricity and computational power, they will be rewarded with new currencies. And this new block will be added in the blockchain, and the updated blockchain will be circulated with the network. So here you can see the block structure. You can go through it by yourself by pausing the video. But one thing I want to show you here, actually the previous block hash. So the block hash, here you can see hash of the previous block header. It is included here. The hash of the previous block is included here. So if anything is changed in the block one, it will change the block hash of block one. And since its hash is included in block two, it will change the block two hash also. It will change the block 3 hash also. So the change will be apparent and everybody will be noticing it. So types of blockchain we are having, like blockchain is like a ledger only. So we will classify it on the basis of read, write and commit transactions. There are two types of blockchains, like public and private. Public blockchains, which we have discussed now, like Bitcoin blockchains. So there will be two kinds of blockchains within the public, like permissionless and permission. The permissionless blockchain is totally decentralized. Anybody can join, read, write, and commit. It is hosted in public software. People can remain anonymous, but it is very low. It has very low scalability. Permissioned blockchains will permit some people to join and read, but it will not give them right access. Private blockchains are very good for organizations, business entities, because they don't want to disclose everything to public. And in permissionless, the restrictions are less, and the permission, definitely the restrictions are more. So here are few examples of public blockchains, that is Bitcoin, Ethereum, DAS, Factum, and here are the attributes of public blockchains. They are completely decentralized. They're having a public ledger open to everyone. They're censorship resistant, that nobody can shut them down. People are anonymous. Moving to next, we are having enterprise level blockchains. Like it is suitable for business. Here, people's privacy is important, not anonymity, because everybody knows everyone. Provenance tracking is easy, so you can track the transaction to its roots. Single shared ledgers with multiple stakeholders can be maintained. Transparency and legal disputes, better coordination, value creation can happen, because there will be less dispute, because one single ledger will be maintained across all the parties, so the chance of legal disputes will be less. So blockchain SWOT analysis, I just wanted to show you the strength, weakness, opportunities, and threats of blockchain technology. And here you can see the strength, that it provides decentralization. It shifts the control from a certain group of people to the masses, and there is no single point of failure. It is open source, highly secure. Asset provenance can be tracked, asset history can be tracked, dynamic and fluid value exchange, for example, tokens, cryptocurrencies. Opportunities are a lot. Like value innovation, you can create new kind of like tokens, you can create new kind of decentralized organizations. Reduced fraud, obviously, reduced legal and audit cost, new business models are possible, reduced financial intermediaries, reduced third party risk. Weaknesses are still there is very few blockchain professionals, so skill scarcity is there. Lack of trust due to new technology, which is obvious. uh, Customers are unfamiliar with this new technology, so they don't have a good user experience. Wallet and key management is essential, but I will not be covering this wallet and key management here. Scalability is a big thing. Like public blockchains, they face huge scalability issues. Like threats will be your legal and jurisdictional barriers, because there can be laws which can prevent you from making cryptocurrency transaction. Political diplomacy can play a great role as a threat. Poor governance, because there is no law, there is no nothing. So if you are if you are defrauded by the system, nobody is going to help. So lack of legal structure, there is no legal structure or law now. Moving further, let's go to the blockchain revolution, and you can see that blockchain is revolutionizing the public services domain completely. That you will be in future, you will be seeing your public records, your land records, property records will be saved in blockchain. Digital certificates, educational, death, birth marriage certificates will be saved in blockchain. Pharmaceutical supply chains will be possible, like a blockchain enabled e-sign possible. Identity management, because for the identity we depend on the third parties, blockchain can provide the identity uh, uh, in a more uh, transparent way. So power distribution, duty payments, tax payments, agriculture and other supply chains, e-voting is possible, because many times we think that voting is manipulated, but with blockchain, the voting will be totally immutable, So electronic health record management, nobody can tamper with your health related data. Digital evidence management system, this is good for your investigating agencies. They will have a good evidence tracking system. Public service delivery will be improved. So next part is automated contracts. Like contracts are the backbone of any kind of business dealings. So here the automated contracts will be like the terms and conditions will be coded in a software, and it executes automatically whenever the conditions are met. So it is stored within the blockchain, that is why it is immutable, it is distributed, and it eliminates the needs of mediation. For example, suppose you are starting a crowdfunding project, and the contract is written in a code and available to all the stakeholders. If you meet the goals, then the contract automatically transfers the fund to your production team. But if your goals are not met, obviously the contract itself will transfer back the funds to the supporters. So a new kind of accounting. First there was single. Let me take a quote of UG actually. So first there was single entry system where we are writing down what happened. Okay, like I brought a car. Like then the double entry system came, like because of Luca Pacioli, and there we have to explain the reasoning behind the I brought the car, for what, like for credit or for sales. So this kind of things called double entry bookkeeping, and here you can see the problems with this kind of system, because here you can see participant A, participant B. They're having two books separately, and there are bank records, auditor records, regulator. And so everybody is having their own records which are not connected with each other. Okay, so it makes the system very inefficient, expensive to maintain, and these are like single point of failures, so they're vulnerable to threats. Okay, so the problems with present day accounting systems, like since it is a centralized management breeds corruption. For example, Enron, WorldCom, time consuming and costly to maintain. Obviously, a single point of failure. Obviously, reconciliation and legal dispute, since ledgers are maintained in different entities. You have to reconcile your transactions with other parties. Corrupted audit system, as we can see, many like big four firms are involved in this kind of corruptions. Human error is obvious. Lack of transparency. The solution is to have a single database spread across multiple organizations, multiple stakeholders, like maintain a single record which will be accessed by banks, insurance companies, auditors, regulators, your counterparty with whom you are transacting. So all the counterparty party transactions will be recorded within the blockchain, so that it provides a immutable proof of facts which happened. Next, I'm moving to the last part of this section, that blockchain helps in effective supply chains. Suppose you brought a apple in your in your grocery store, and like it claims that it is a very organic apple, but how would you verify? Because if you see the supply chain, the apple comes from a farm to processor, distributor, and every point there will be few documentation which is created, and these documentations are not properly tracked. Okay, suppose we track these documentations in blockchain, within few seconds we can know the like from which farm the apple came. So suppose I ate the apple and got sick, we can know that at which point of time some kind of toxins or insects or bacteria affected the apple. So this kind of things can prevent pandemics from spreading. So I wanted to talk about many more things, like the tokenomics, the decentralized organizations, and IoT, and there are a lot of things, but since I have 15 minutes, I just have to wind up here. So thank you for joining me. I hope to see you in next year. Bye.